What's up, guys? Welcome to the Cashcraft, your daily dose of finance and technology news and updates. One of Wall Street's most secretive trading giants just posted a job opening. They're not looking for stock traders. They're looking for people who can bet on the weather. Susquehanna International Group manages billions in options trading. They're the kind of firm that prints money when markets panic. And right now, they're hiring a team to trade something most people don't even know you can trade. Event-driven outcomes, elections, weather patterns, anything with an uncertain result and a timestamp. Here's what's actually happening. Prediction markets, platforms where you bet real money on real-world events, just became legitimized in the United States. For years, these markets existed in legal gray zones or offshore. Then in 2024, a platform called Kalshi won a federal court case that changed everything. Suddenly, you could legally bet on whether the Fed would cut rates, whether a hurricane would make landfall, or how hot July would be in Phoenix. Real money, real contracts, regulated by the CFTC. Wall Street noticed immediately. These aren't casino bets, they're derivatives. And Susquehanna knows derivatives better than almost anyone. They've spent decades building algorithms that find tiny pricing inefficiencies in options markets and exploit them millions of times per day. Now they're looking at prediction markets and seeing the same opportunity, except these markets are young, inefficient, and full of amateur traders making emotional decisions. The job posting is revealing. They want traders who understand event-driven outcomes. That's Wall Street speak for anything that resolves to a binary result. Will it rain in Chicago next Tuesday? Will Congress pass a specific bill before March? Will a tech company hit its earnings target? Each of these is a market now. Each one has a price. And if you're better at calculating the true probability than the crowd, you can make a fortune. But here's where it gets interesting. Susquehanna isn't just hiring one or two people. They're building a team. That signals they think this market is about to explode. And they're probably right. Kalshi's trading volume has grown exponentially since the court ruling. Polymarket, another platform, saw billions in bets during the 2024 election cycle. The infrastructure is here. The regulatory approval is here. The only thing missing was institutional capital. Now that capital is arriving, when a firm like Susquehanna enters a market, they don't come to participate. They come to dominate. They'll bring quantitative models, massive capital reserves, and execution speed that retail traders can't match. They'll identify patterns in how people misprice weather events or political outcomes. They'll arbitrage across platforms. They'll do what they always do, turn information advantages into profit. Think about what this means for these markets. Right now, prediction markets are mostly populated by enthusiasts and political junkies. The prices reflect crowd wisdom, but also crowd biases. People overestimate the chances of dramatic events. They underestimate base rates. They let recent news distort their probability estimates. Every one of those mistakes is an opportunity for a sophisticated trader. Weather markets are particularly fascinating. Most people have no intuition for meteorological probabilities. They see a 30% chance of rain and either ignore it or panic. But Susquehanna can plug in historical data, current atmospheric conditions, and ensemble forecast models. They can calculate the true probability to 2 decimal places. When the market price diverges from that calculation, they trade. Do that across hundreds of weather events, and the edge compounds. Here's what most people miss about this moment. Prediction markets aren't just a new asset class. They're a new form of information infrastructure. When real money flows toward accurate forecasts, these markets become truth-seeking machines. They aggregate distributed knowledge better than polls or expert panels. And now Wall Street is about to supercharge that process with capital and computing power. But there's a tension here. Prediction markets work best when they reflect genuine crowd wisdom, diverse perspectives, local knowledge, and distributed information. When institutional traders dominate, markets become more efficient, but they also become less democratic. The crowd gets priced out. The wisdom becomes concentrated in algorithms. You get better forecasts, but you lose something in the process. The question you should be asking yourself is this. When Wall Street's smartest quantitative traders start betting on everyday events, weather, politics, cultural moments, What does that tell you about where information itself is heading? We're watching the financialization of reality in real time. Every uncertain outcome is becoming a tradable asset, and the firms with the best models are about to own the future's probability distribution. That's all for today, folks. If you found this helpful, make sure to like and subscribe to the Cashcraft for more finance and tech news. Drop a comment below with your thoughts, and I will see you in the next one.